My name is Nigel Fellowes-Freeman. I am the founder and CEO of Kanopi, which is an insurance as a service platform that helps insurers deliver embedded insurance to customers through digital platforms where and when they need it. Thanks for joining us for episode 2 of Building Tomorrow's Insurer as we explore the exciting developments and trends in the global insurance market. Today, we'll be speaking to Andrew Re, the ex-CEO of Digital Partners at Munich Re, and current non-executive board member at MedGulf. They are one of the leading listed insurers in the Gulf region, so super excited to hear a bit more about that. He's got decades experience leading insurance businesses in the UK, Asia, Africa, and he has a very diverse perspective on the rise of insurtech and the future insurance. And so we are very, very lucky to have him here today, and we're excited to have the conversation. Thank you for your time. Thank you for coming, and maybe you can give us a brief intro into you and kind of how you fit into the insurance industry. Most of us have fallen into it, so I'd love to hear your story.
Sure. Thank you for the invite. Yes, like you, I fell into the industry. First job after university. Everybody gets in and nobody leaves. So I've spent my whole career in and around various bits of the insurance industry, working for insurers, for a consulting firm, for a reinsurer, always with a technology or innovation edge, building new products, building new things, building new businesses. I got into InsurTech in a big way in 2016, really at the start of the sort of wave, when I built a vehicle called Digital Partners for Munich Re, which was a combination of venture investing and InsurTech partnerships. Can
you talk to us a little bit about that, Andrew? I'm trying to just double click there a little bit, but that was just really, like, if you're looking back, it was really one of the first reinsurers that kind of dipped their toe. It was the first kind of really looking back. It was like a bit of a breakthrough moment, right? Like you were leading the charge there pretty globally. So I'd love to understand how that came around and kind of what you saw and kind of maybe how it's changed since then.
It was one of those, it was sort of just lucky coincidence. I'd been running Munich Re's life business in Asia Pac, UK and Africa, and that had been a turnaround. So I'd been doing that for 5 years. We inherited a business which was making just about zero, maybe not even quite zero, and we left a business that was making about 300 million euros a year. And by we, I mean the team I built around me to do that transformation. And the thing about transformation is part of it is putting in good leaders and the good succession plan. And having done that, you really have to move on, because otherwise you're going to be, you're just going to get in the way. So I felt I needed to move on. I had a hankering to get back to building, getting back to something that was closer to technology. And then I saw InsurTech sort of coming over the wall. You saw that wave of money going into fintech. You saw suddenly, like East Coast money going into fintech. And then you saw West Coast VCs who really, didn't know anything about insurance other than buying their auto insurance once a year, suddenly backing InsurTechs. And I thought, this is something that I want to be in. And at the same time, Munich Re was going through this sort of existential thing. Munich Re is one of those businesses which really aspires to be everything in its industry. For a while, I was responsible for Munich Re's operation in Mongolia. They're the biggest reinsurer in Mongolia, but the only.
There you go. Not sure there's too many.
No. But they just, everywhere insurance is done and every part of insurance, Munich Re will be there playing some kind of role somewhere.
Yep.
So InsurTech's coming along, and Munich Re's natural desire is, well, we need to find a way to play. I said to them, look, the way you can play is to be a venture investor. That's how you play with small companies. The challenge for Munich Re as a venture investor is, why would an InsurTech take Munich Re's money rather than Sequoia's money or, A16Z's money? And so that led us to this sort of so-called InsurTech MGA sector. The guys basically trying to build insurance companies without a balance sheet. What those guys need above all is a large patient balance sheet behind them, which is basically what Munich Re is. So really it was it was an idea. I sort of sketched it out onto, like 5 slides. And then I took it to Torsten Jeverek, who was the CEO of Munich Re's reinsurance business at the time. I knew Torsten very well, and he was always a technophile and always a sort of forward-thinking guy. Mm-hmm. So I thought, look, I better just try and explore this with him. And there was an internal conference, so I met him in the bar. And I sort of showed him my 5 slides, and I said, I've got this idea, Torsten. I'm not really sure where it's going, but it feels like to me there's some legs in this. And he went, he said, how much do you believe in this? And I said, well, there's work to do, but, there's no point writing a big business plan because we don't really know what we're doing. We just need to go and explore it. But I think we should do it. And he said, fantastic. Let's have a board meeting tomorrow morning, and we'll appoint you CEO of the unit, and we'll just start. Hold on. I run a €3 billion revenue business, Torsten. Yeah, but we can find someone to take over that. That business is in great shape. You're fine. Carry on. So, in the space of 2 days, I managed to not only sort of kick myself out of a job, but also kick my transformation team out of a job, and sort of move us all to initially we were all working out of my office. In the good old ways of Munich reinsurance, you had a nice sized office, so I sort of moved my whole team into the office, and we started there.
Sit around one desk. And how do you think? Super interesting, right? Because then that was like 2016, and now we're kind of 7 years later. And there's obviously been a real involvement. Obviously, you called out then kind of MGAs, balance sheet support, and how do you kind of see kind of reinsurers, insurers, and that kind of evolving ecosystem over time? How have you seen it kind of build, and kind of maybe how do you think it's transformed, and maybe kind of where do you think it kind of sits today from that change?
Yeah, I think what's happened over time, we were sort of toddlers in 2016, right? Yeah. We were making the stuff up as we went along. Yeah. Nobody knew where this was going. There was an awful lot of hype. It was really difficult to avoid getting sucked into that hype. And I think where we are now is the industry has grown up. All parts of the ecosystem has grown up. All parts of the ecosystem has grown up. The eventual impact we'll only know in, 30 years' time, probably. Insurance is.
Do you think that's time frame? That's the time frame you kind of think of.
Insurance is a very, very slow clock speed industry, right? So transformation just takes an awful long time. But I think what you see now is a much more clarity about the ecosystem as to what each partner does and is good at. And that creates, I think, space then for people who are really good at one area. We set out in Munich Re, and our first thought was we were essentially taking businesses that either had nothing at all, they were just brand new startups, or businesses that had that were originally broken, and turning them into MGAs. And then you've got a big question: okay, how are you going to build all of that technology, which is really complicated, which requires real understanding of insurance? Our first version, it sounds bizarre now, our first version was to build that ourselves. And what on earth we thought we were doing, trying to build, a ground up technology, I have no idea. And
how far did you get? Did you kind of get a version 1 up?
Yes, never a great one though. And at that point, then you have the problem that, the partnership side of the business and the investing side of the business was wildly successful. So that was moving at 100 miles an hour. We're getting more and more partners. We're getting operationally really strained, and the tech, was always 6 months behind where we needed to be. And then, of course, our partners are getting frustrated because they're actually quite good at building tech. I think if you look at where we are now, it seems to me that the tech is either built by the startups themselves, or in many cases is built by sort of ecosystem integrators. A lot of the embedded insurance that wave coming, I think, is being driven by people who can build that explicit partnership infrastructure.
Yeah, makes sense. And you think you're calling that out in terms of that that evolution. I think they made it kind of really interesting earlier, which is like seeing what happened in payments and like fintech and that repeating itself. I think that's a really like interesting way to think about it, because I think those lessons have been learned, right? And it's always like a little history book that you can look out of kind of what's kind of turned out there. And I think in that sector specifically, there's a lot more. Less disruption, less kicking incumbents out, and more working with and partnering with and enabling versus trying to kind of remove or disrupt, I suppose. And so kind of are you seeing that? Are you seeing that starting to happen with incumbents and reinsurers here around partnering kind of to realize those digital transformation goals that are maybe taking a long time? Like, how are you seeing that maybe kind of in any of your roles or kind of relationships you have today?
Yeah, I mean, I think if you look at the fintech more broadly, you had what I suspect is sort of we're still working our way through in InsurTech. That you had people, someone like TransferWise is a great example. Mm-hmm. They picked a single process that banks did badly. They did it well, and they did fun, and they did very nicely out of that. They then sort of tried to turn themselves into a retail bank, and they realized actually retail bank is really quite difficult. And there's a reason that retail banks are not very good at things like international payments. It's because they spend all their effort doing retail banking, and then at the same time you had the retail banks going, "Oh, we need to build a funky digital bank for our new customers. Let's call it Timmy.com and start." And those, I mean, not all of them, but by and large, they've been a catastrophe, because big companies, absolute catastrophe, it just doesn't work. I think if you look at insurance, we're still going through that learning curve. There are a bunch of insurtechs. I think mostly they're now sort of trying to survive, but there's a bunch of insurtechs whose idea of finding a niche to play in was to take on Geico or Admiral at motor insurance. And, I mean, good luck. I'm not saying it's impossible, but you're probably going to lose. Whereas, I'm chairman of Ticker, a UK motor MGA at the moment. And Ticker is very cleanly focused on the telematics space, where, telematics was for young drivers only and done badly. Mm-hmm. Ticker looked at that and realized, they could do that better. And if they did it well enough, the big companies wouldn't really compete with them because it's just too niche. And secondly, you can apply telematics to all sorts of other things, older drivers, low mileage drivers, van drivers, drivers with a drink driving conviction, and so on. And actually, there's this whole tail of sort of niche things that people can, where you can make money, and you don't aspire to be Aviva. You aspire to be really profitable and really good at what you do. I think that's where payments has got to. I think that's where InsurTech is heading towards. And I think that's a really interesting position. Like, there's no insurer which is really good at sort of multi-product white label. If you were a big retailer, where would you go? You probably end up going to the big insurers, and they're not very good at doing that kind of stuff. They're not very interested in it. It's not big enough. It's too much of a niche. Those kind of spaces, I think, are where InsurTech works, and then everybody sort of understands their place in the chain.
Yeah, it's interesting. Like, just to hold it on telematics for a little bit, because I think that's a really interesting space. Like in Australia, where we are, like, it hasn't yet really kind of hadn't started to hit its straps yet. But I guess I see some bunch of stuff coming out of Europe and obviously UK, US a little bit. So yeah, just super interested how you're seeing kind of telematics specifically. I know that Italy's doing a bunch. Like, just interested in how you're seeing it. How do you see telematics in Europe and proliferation, how it's being used, kind of.
Yeah, I think telematics is it's a bit like the sort of channel question. Why hasn't the whole market gone direct? And honestly, I think nobody really understands these dynamics because they're connected with a bunch of complex societal dynamics. What you see in the UK, which is the leader in this space, is aggressive price competition at every point.
Interesting. Yep.
So it's a highly transparent market. It's a very price competitive market. It's a market where the leaders are not only very efficient but also very good at the sort of technical aspects of pricing. And what happens then is that price becomes that the cross subsidies between customers begin to disappear.
Mm-hmm.
So your motor insurance price really quite fairly represents the risk that you pose. And at that point, higher risk drivers then tend to pay much more.
Mm.
And that creates an opportunity for telematics, because eventually telematics, it either reduces risk or it distinguishes between higher risk and low risk drivers. And the older driver one is really interesting in the UK because that's recent, right? It's only really, I guess, in the last 10 years that you start to pay more for your insurance as you get older. And I don't know every country's rating schema, but I suspect that is still pretty close to being unique.
Yeah.
But as soon as that happens, as soon as it's more expensive to insure yourself as a 70-year-old, then you end up at telematics. I mean, almost by default. So I think telematics in other countries depends a lot on what the sort of competitive structure of the industry, which depends on regulation and channel structure and everything else. Eventually insurance, bizarrely, even though we all sell the same product everywhere in the world, it's still a very local game.
Nuanced, super nuanced. Yeah, I remember when, like, we had a previous conversation we had, you were speaking a little bit about kind of brokers and I guess the digital MGA was trying to get rid of the broker, and then some of them, a large majority of them, then actually started using brokers and kind of using the broker as a channel. And so the thing that they were trying to displace were actually then using as a partner to work with. And I think that was an interesting change over time. I'd love to get your thoughts on that, around like kind of how you saw that play through, and then I guess the broker's position. It's a well debated kind of subject, right? The broker's position moving forwards over time, kind of in kind of retail and business commercial markets. Kind of really interesting, kind of how you're seeing it and how you're seeing it play through.
Yeah, I mean, my conference shtick is that when God designed insurance, he was having a bit of an off day. That you essentially have two functions in insurance. You have somebody who looks after the customer, holds the customer's data, manages the customer's issues when they have a claim, and so on. And then you have somebody who does the money. And there really isn't anything else in between. There's no manufacturing in insurance. We don't make anything. And if you look at how insurance works, I mean, particularly business insurance, you split those two functions up between a broker, who looks after the customer to an extent, but doesn't, for example, hold the customer's data, because that goes to the insurer, which has the regulated entity, which is sort of just a piece of paper, but also some of the capital. And by the way, you might have an MGA between those two. Mm-hmm. And then the rest of the capital gets provided by a reinsurer, and you have a broker sitting between those two. And the reinsurer very often thinks that they understand customers and product design, so they're sort of trying to design the product all the way back to the front. And that, I mean, it's just higgledy-piggledy. Yeah. So what I saw in the InsurTech MGAs, the start point was that they said, look, we are going to be direct insurers. And the fact that they're an MGA was just a balance sheet. Yep. Again, just about cost of capital. One of my favourite businesses in the London market at the moment is a business called Dale Underwriting, and it's basically a sort of classic London market underwriting business, a real expert underwriter, It's a sort of mid-sized London market business, so it's, I don't know, let's say 300-400 million capital, of which none is owned by Duncan Dale, right? I mean, he's just the underwriter. He's the guy who makes the decisions and the capital sits behind. That seems quite a logical model to me. So the way I saw the InsurTech MGAs was that they were trying to control the customer, and to control the customer, to own the customer, you needed to own all of the interactions with the customer, which meant that you wanted to be an MGA because then you didn't have to interact with insurer systems. You could simply interact. You could simply provide the insurer with sufficient data to make them comfortable about how they were using their capital. And so we sat down and we were the capital. I think two things happened there. One is that one of the mistakes the venture community, as the non-specialist venture investors got involved, they got obsessed by product because they love product. And they missed the point that in insurance, the product is not the piece of paper and the terms and conditions, and it's not the technology on the back. The product is the customer. Distribution is where the money is, and so your interaction with the customer is what's important. So as soon as you start going through brokers, you've moved yourself back in the chain again. As soon as you start going through brokers, you basically become a traditional MGA. You may as well start grabbing all the capital. The way I think the model has to end up working is you have to start with the customer. And if you look at if you look at the traditional brokers, they're just as ripe for disruption as anybody else in the market. Perhaps what the InsurTech MGAs missed is that it's quite difficult to control the customer unless you provide all of the customer's needs. And if you focus just on providing a really great single product, but your customer buys 5 different products, then you're never going to own that customer. You're only ever going to be, one leg in.
Yep.
And the customer doesn't think about general liability and professional liability and workers' compensation. The customer thinks about insurance. So the customer needs one point of entry for insurance.
One point of entry for them.
Which does lead you back to the broking part. I'm about to become chairman of a brand new startup broker called Hub Insurance here in the UK, focused on mid-sized commercial business, so £15,000 premium type business, and their shtick is to say, look, whatever we do, we have to own the customer. And that means we have to start off as a broker because you have to provide all of the products for them. And you have to do everything you can to make that a good experience, given the constraints of having to deal with insurers. One way they do that is they automate all of their own processes. So your average broking process, time to close a sale for a broker is about 3 hours worth of work, and you're paying someone to do that. They automate that so that for them, in the sort of leading lines where they've got the most technology in, that 3 hours is now down to about half an hour. And they use that to provide a cheaper cost of insurance to the customer. Because then they have high conversion, they get more data, that all helps. But principally because that is that's the way in which the customer can feel that they're getting a better service from Hub than anybody else.
Got it.
And then so that helps them gather customers, and then in the back of that, they are then building MGAs product by product. So their idea is that if you come in, if you're a local construction business, you've got a bunch of different insurance you need to buy. Some of it will be completely on the Hub platform, and therefore it will be end-to-end and nice. So, your fleet insurance, which is highly interactive, you've got a lot of vans, they crash a lot, will be like that. Whereas some of your construction liability insurance, which is generally buy and forget, and if you're not forgetting, it's because it's a big complicated claim, then they won't do that through an MGA, but because it's low touch, the fact that you have an insurer involved doesn't damage the customer experience too much. But then they own the customer. I think the InsurTech MGA that operates through brokers, to me, is not a model that particularly makes sense. I'm not sure why that's better than being an insurer, unless you're significantly cheaper and offering a significant price advantage, which is hard, really. Our industry is pretty competitive.
Yeah, margins are tight, aren't they? It's super interesting. Yeah, looking forward to see how that turns out. That's, I think, a super deep insight on the broker side from the coalface. If you were going to change gears a little bit, I know you're doing a little bit of work in the Middle East, and that's I think a part of the world that not too many. There's different folks, no doubt, different parts of the world, and we called out the nuances in the industry a little bit earlier on, and just kind of interested in how you've seen insurers there, have you seen them on their digital transformation journeys, kind of maybe different areas of innovation that you're seeing or a lack of, like just really interested in what you're seeing in those markets.
There is certainly now a pace of change, I think, in those markets. I'm on the board of a listed Gulf insurer. Honestly, that's one of those what goes around comes around thing. The CEO of that insurer was somebody who ran a very complicated transformation project for me when I was a partner at Oliver Wyman, and since then he's gone on to become a sort of business turnaround specialist, and now he finds himself trying to turn around this Middle Eastern insurer. So he calls me and says, "Would you like to join my board?" I've got a lot of things going on. I'm mostly focused on smaller companies at the moment. And he said, no, I want you to join my board. I think you probably owe me a favor. I said, okay, fair enough. I owe you a favor. I'll join your board. But actually, it's really fascinating because his vision for the company is let's see what technology is out there. We don't have to be first in the world. We've got a bit of luxury to see what's worked elsewhere in the world, but equally, when we believe a model that something is going to work, we can use the most modern technology to build that. And their shtick is if you aspire to be a global leader in your category, then the Gulf is going to be on your list somewhere. So we are your reference site for the Gulf, and that so that creates pull. So, for example, one of the things they're doing is they're building a third-party admin business for health. But they're a substantial health insurer, and if you look at health insurers around the world, what you find is that they all use a small number of very large health TPAs. So because these TPAs have scale and they have good technology behind them and so on. So half the US insurers use United's health TPA, for example. So having seen that work in other countries, they say, well, that could work with us. Now, what is the latest technology going to build health TPAs? What problems do we need to solve? Using machine learning to read and understand hospital bills and do auto acceptance of claims, for example. And rather than sort of have to build that into an existing sort of infrastructure, they're saying, okay, let's go and build a health TPA. Let's build now what someone like United is trying to transform into, because we're building on in a greenfield. You know better than I, Nigel, that if you're building greenfield, it's just so much easier than trying to transform an existing legacy. So actually, they're moving at 100 miles an hour, and it's fascinating to see regulators going with them. If I think back to my first time I worked in the Middle East, which is probably 20 years ago now, at that time, insurance regulators in the Middle East barely understood insurance, and whereas now, you are dealing with a sophisticated, modern regulator who absolutely understands what it is you're doing and the risks and the regulation aspects of that. So, again, you're seeing these markets really become professional.
more mature, and that's interesting, isn't it, in terms of business model change as well, like going from kind of being like more risk capital insurer like thinking to actually like there's a whole business model within the TPA and the claims management that maybe we haven't done a really good job on or haven't explored, and so actually that's a business model on its own that can stand alongside kind of the rest of the business. So it's interesting, that kind of business model transformation as well, in terms of kind of balance sheet and capital and all those things, and the things you can move away from potentially in terms of revenue share over time. So yeah, it's super interesting that those kind of things are, and obviously kind of in the large insurers, those things are happening.
Yeah, and it's one of those things I think that a combination of a clear head and technology help you do that. The TPA came about thinking about what are we good at, what are our problems, and what if we could have everything we want, given the skills we've got, what would that business look like? And then you realize actually technology can allow you to do that. I think the world we're moving towards is, I think, going to be much more sort of multi-specialist businesses, understanding that what I'm really good at is pricing, and because I'm really good at pricing, that means my business model should have this shape. If I can do pricing for somebody else and earn a return based on my pricing, as opposed to having to bring a lot of capital to it, then I'm going to make more money. So one business does that. Another business says, well, what I am is scale. I've got low cost of capital. So for me, it's all about having a balanced portfolio and just being able to apply large amounts of capital at scale. Yeah, that to me makes the industry much more interesting. I suspect a lot of this will happen after I've retired, but you
got a little bit of time left, I think, Andrew. I think you got a bit of time, but maybe you don't. Maybe you got a bit of time to go. Hopefully, those kind of two startups you're chairman of hit their straps. I feel like we are. This may be almost the last day of the year that we can have predictions for 2023. I think the 30th of Jan is we're almost there, almost like kind of us going to be able to say, actually, what do we think is going to happen this year? I'm putting you on the spot a little bit here. Is there anything you, not predictions as such, but is there anything anything you're foreseeing for this year that maybe kind of, that you think is going to happen, maybe some kind of wins for the year and maybe some M&As or some fails? Love to see hear a couple of things that you think are going to happen in 2023.
I think in 2023, the InsurTech VC market is going to come back. I think money is going to come back in, but in a much more differentiated way. I suspect what we will see is a round of failures or failures disguised as exits. A lot of InsurTechs merging together and so on, because their investors who have been supporting them to now will start saying, look, there are better opportunities outside. I'm better off letting this go. So I think we are we're reaching the sort of denouement of what's happened since sort of the end of 2021. I do wonder whether some of the InsurTechs that went public but shouldn't have done will get bought out. Some of them are beginning to look cheap now. It might still be a risky purchase, but it feels like there's a public to private deal in there. I think we will see I think a bunch of new money going into really good new ideas. I suppose the other thing that's still going on is we still have in the reinsurance market and in the cat market, and particularly I think into business models. In 2016, capital really promised customer control, and also business models, whether it was venture capital or underwriting capital, a market have not been. I suspect we're going into a market, whole embedded space that venture capital starts getting cheaper again, but underwriting capital remains really, really expensive. So businesses which are efficient at using underwriting capital. Businesses which are proving a pricing advantage will start to come to the fore.
Awesome. Thank you so much, and I super put you on the spot there, Andrew. It's been an absolute pleasure. I've taken a bunch of your time today. Super interesting. Thank you. There's the breadth of experience from standing up Munich Re DP through to the Middle East is few have got the experience. So thank you. Appreciate your generous time today. Really, really interesting. I'm sure that everyone listening will have enjoyed it. Have a wonderful year. Thanks again for your time, and have a wonderful day.
Nice to talk to you, Nigel.
Thanks, Andrew.
Thanks a lot. Bye.
Well, I hope you enjoyed that episode. To watch the video version of this episode, head over to our YouTube channel. You'll find that in the link in the description. And if you'd like to hear more from industry leaders who are pushing the boundaries in insurance with a sprinkle of interest, check out our other episodes of our podcast series, Building Tomorrow's Insurers, on any of the general podcast platforms. More content, follow us, LinkedIn, Twitter, anywhere we are around. Links in the description below. Thank you, and have a wonderful day.